That is the closing bell you're hearing on Wall Street. And now it is Market Domination Overtime. We're giving you full coverage of all the moves to get you up to speed on the action from today's trades. And Yahoo Finance's Ines Ferre joins us now with the latest market action. And Ines, by my count, we're up 5 days in a row in the majors and the Russell 2000. And I think we eked out some gains on the monthly chart. And that's just going to extend these winning streaks to 6 or 7 months for a lot of these major markets that we're watching.
That's right. If we take a look at our Wi-Fi Interactive, you will notice, yes, today's gains have been good for these major averages on a month-to-date chart. I'm going to pull it up for the Dow Jones. You can see eking out a gain there for the NASDAQ Composite for the month, down 1.5%, but the S&P 500 eked out a gain for the month of November. If we look under the hood where we're at with the sectors, we saw this month a rotation out of tech and into healthcare, for example. The best performer there on our Wi-Fi Interactive, also materials and consumer staples. Those have outperformed for the month. And it really tells you the story of what's been happening with some of the Mag 7, because you saw that tech underperformed for November. And here you have a mixed picture month to date. Here you see Alphabet up 13%, has roared this month. And then you look at Apple up 3%, Broadcom 9%, but then you've got Nvidia that's lagged, down 12% month to date. Microsoft and Amazon also lower for the month. Here's a day action for those stocks. And then if you just take a look at crypto, where we're at for the month of November, we're looking at Bitcoin that's around 91,000, just below that. But a month to date chart, you will see how much crypto has really tumbled this month, with Bitcoin down 14%, but off of the April lows that we saw of just around 81,000 last week. And then just want to pull up where we're at with commodities, because we have seen a little bit of movement there in the commodities market, with crude oil up 1%, Brent also higher. But I want to zone in on gold, because gold is up at $4,250 per ounce. This is not that far off from its all-time high. In fact, it's less than 5% off its all-time high. This is the fourth straight month of gains for gold, up nearly 60% year to date.
All right. Thank you for that. And by the way, Michelle Schneider earlier gave a target of gold 4,800, so watch out for that. Thank you, Ines.
Thank you.
It is the end of a rocky month for markets, as sharp cool down in mega cap tech names has led to a decline in November. Here with a technical eye on how the markets are shaping up heading into the new year, let's welcome in Rob Sluymer, RBC Wealth Management technical strategist, and CMT, I might add, chartered market technician. Rob, we've talked about technicals on the Stocks in Translation podcast, and just it always excites me at the end of the month, because then we get those big monthly candlesticks. What are the long-term trends that you're seeing here?
Yeah, that's such an important view to be starting with. I think if we look at the S&P 500, we just look at the rebound that we've had from the 2009 lows, that structural uptrend, that longer term channel that the market's been in is still very much intact. I think the only issue or the challenge that we have is, as we start to work into 2026, the market's at the upper end of that trend channel. There's some fairly important resistance here around 69.60 or so, fairly close to the recent highs. And that's pretty much at the upper end of the range. I call it 7,000 would be sort of the upper end of that trend channel. So I think a lot of investors are very concerned about valuation. The market's sort of at the upper end of that range. It doesn't really make a case to be getting negative here, but it does suggest you want to be a bit more cautious, a bit more stock selective, and a bit more sector selective as you move into next year.
Yeah, let's think about December for a second, because on a seasonality basis, December is kind of the time of year when volatility drops. At the end of the month, we tend to get the so-called Santa Claus rally. And one of the things I was looking at recently, seasonality from Ryan Dietrich, when the market's up substantially the way it is right now going into December, sometimes there's a pause in the first half of the month. I'm wondering if that affects some of your timing thinking on the majors that we're talking about here.
Yeah, I always look at that seasonality. It's such a helpful thing to have as a general backdrop. But I think what's really important is, where are the technicals right now when we go into these seasonal periods?
Sure.
like, let's take, for example, the recent de-risking that we've seen in the market through November. A lot of stocks got very, very oversold. And so from a trading standpoint, and you're asking sort of a shorter term question here, as in terms of the first half of December, a lot of these daily trading indicators that track 2 to 4 week moves are just coming off the bottom from very oversold levels, and they should support further upside into the first, call it, half of December. So, could we get a pause at any point? Absolutely. But I think a lot of names, a lot of sectors have been pushed into oversold territory. And I think we're going to see new highs on the indices. Now, of course, we're just coming into this Thanksgiving weekend. Volumes tend to be very low. There's some short covering coming on. So I think that the critical levels are going to be those recent highs that we just saw in the market around 69.20 on the S&P. And it's just going to be absolutely critical that the market is able to push up through those levels. I think there's potential to do that. I think the breadth is starting to come back in the market. But we'll see how it plays out. In general, these daily indicators should support further upside into the early part of December.
Well, let's broaden the discussion and the time frame out. Looking again at 2026, you mentioned some of the sectors. What do you like? Where are the opportunities that you're seeing on a technical basis heading into the new year?
Yeah, I think we've got to look at technology and growth stocks as still being pretty much dominant leadership. They've been in place since 2006, and I think you want to be careful becoming too negative on them. I certainly appreciate valuations are high. Some of the stocks have started to get a little rocky, but I think it's just premature to make a case that the longer-term technical backdrop for technology is rolling over. Having said that, I do like this idea of rebalancing portfolios. There's valuation concerns, there's technical concerns on some of the growth stocks, whereas other areas that have been underperforming for the last, call it, number of years, like healthcare, which has had a tremendous month this past month, I think those are still bottoming patterns, right? We've seen biotech break out of these huge trading range. We see the medical technology names starting to improve. I think that the pharmaceuticals are starting to bottom. In general, I think that's an area, and certainly after the big move we've had, we probably get a bit of a pullback, but that's an area that we want to be diversifying to moving through the first half of 2026. And believe it or not, there are other areas, like, for example, oil service, which you would not think would be a particularly attractive place given the forecast people have for oil and the way oil's been trading. But incrementally, these areas have been in bear markets for 2 to 3 years, and they look like they're bottoming. So again, I'm not recommending that everybody pile up on oil service names, but I think for the contrarians, that's certainly an interesting area to be looking at.
Well, as Ralph Alcampora, CMT as well, says, the sector rotation is the lifeblood of these bull markets. International, another area that has done very well this year, and depends on the country you're looking at, but we've seen a lot of these countries trounce the U.S. in terms of returns. I'm wondering if you still see the potential there for next year.
Look, I think that the longer term profiles in a lot of these markets are very bullish, or they're still bullish. They've had big runs in 2025. So if we look at something like the MSCI Europe, Asia, Far East, EFA, that too, and similar to what the S&P is doing, is up against some resistance levels or extension levels where I would expect a bit of a pause. I think the key point, and particularly for U.S. investors, is when you look at the long-term relative performance of foreign markets versus the S&P 500 in U.S. dollar terms, they may have outperformed in absolute terms this year, but they're not outperforming on a U.S. dollar adjusted basis. Those are still in longer-term downtrend. So I think you can make money in international markets. I think you can have some exposure there, but there's not a lot of evidence to say that international regional indices are starting a long-term relative outperformance versus the U.S. So I'd be cautious overweighting those markets at this point.
Yeah, that would be a historical aberration if that just continued for years and years. I'm going to give you the floor. We got time for one more. Any final thoughts here?
Oh, I like the idea of rebalancing, right? There's lots of risk. I think if you think about an election year or a midterm election year, historically we see about a 20% correction. So while those don't necessarily have to play out, I think we need to be prepared for a lot more volatility next year. And that's why I think this diversified portfolio makes absolute sense.
All right, we're going to leave it there. Rob, have a great weekend.
Thank you. You too, Jared. Appreciate it.
And coming up, we take a look at the biggest toy trends for Black Friday shoppers next on Market Domination Overtime. According to the Toy Insider, 2025 spending on toys has jumped 7% from last year, but that was before the holiday shopping season even began. Roughly a third of all consumers are planning to buy toys this year, but KPMG finds that inflation and tariff-weary shoppers, they're cutting back, with overall toy spending lagging necessities like groceries. For more on this trending toys of the season, I want to bring in Jackie Breyer, the Toy Insider editorial director. Jackie, thank you for joining us here. So big picture here, consumers are a little bit hesitant to spend. Nevertheless, it seems like they are going to increase their spending on toys. Just give us the broad landscape here.
Yeah, thanks for having me. Consumers are never going to cut back on spending for their kids. Even with budgets being tight this year, we're seeing the effects of tariffs. Parents still want to provide that magical experience for their kids. So kid-related spending is the last place we see parents cutting back. And one of the biggest areas we're seeing is intergenerational play. So families want to spend time together this holiday season. Games and things that they can do together tends to be the strongest category around the holidays.
All right, we're going to get into some of those types of toys and that storyline in a little bit. First, I want to ask you about timing. Should consumers be concerned about toys running out? I've heard that a lot of retailers ordered enough inventory to supply themselves for either the whole season or part of the season, but once that inventory is gone, then it's a different ball of wax.
So there was some concern earlier this year about inventory running out, can't get toys for the kids this holiday. The shelves won't be empty. However, there's limited inventory on particular products. So if your kids have a certain toy on their wish list and you see that toy in store, you're going to want to pick it up right then and there. If you're waiting, you think you're going to get a lower price, you might end up not being able to pick up that toy at all.
All right, you mentioned that intergenerational play, which I thought was interesting. Talk to us about some of the types of toys that are attracting not only the interest from kids, but also the older generations who can join in.
Yeah, so one of the biggest categories this year overall is trading cards and trading card games. And leading the charge is Pokemon by far. And, Pokemon will be celebrating its 30th anniversary this next year. So parents love Pokemon. They love sharing that excitement with their kids. And it's really driving toy sales. Another category that is huge for intergenerational play is building sets. Lego is one of the top sellers for adults and for kids. One of the biggest selling toys across the whole toy industry are Lego sets designed for teens and adults, like Lego Game Boy and Formula One race cars.
Yeah, I can't tell you how happy that makes me as a Lego enthusiast as a kid. And also, I was at the Macy's Day Parade yesterday, and there was a nice Lego float there. Let's talk about some of the retailers here. Walmart, Target, what kind of spending patterns should we be expecting there? Anything that investors might be able to pick up on?
Sure. Toys are driving sales at Walmart this year. Consumers are looking to get the most for their money with the economic uncertainty, and Walmart is really known for that budget-friendly products in general, and especially in toys. Now, Target was up in toys nearly 10% this year. And, consumers shopping at Target are looking for newness. They're looking for trends. They're looking for unique Target exclusive products. So I think we're going to see both retailers do pretty well. And we're also suggesting consumers consider shopping at their local toy stores this year. Those local toy stores, yes. They're experts. They can help you find the gift. If you're not sure what your kids you're shopping for are into, they will help you find the right thing. You won't be wandering the aisles looking around. So all of those choices are good ones.
Yeah, always good to support those small businesses. Thinking about now some of the big toy manufacturers like Mattel, Hasbro, what are the names that you're looking at, and what are some of the hot products that are just must-have that investors might think, okay, well, that's going to be on my shopping list as I adjust my portfolio for next year?
Hasbro and Mattel are both doing pretty well this year. I mean, those toys based on your favorite characters, like Marvel and Star Wars, those are coming from Hasbro. Mattel has Hot Wheels, Barbie. Those are huge. These are the top brands in the industry. So those are very important. And as I mentioned before, Lego is tremendous. So those are really where you're going to see the most significant sales this holiday.
All right. Jackie, really appreciate your insights here and joining us on a quiet Friday afternoon. Tomorrow,
thanks for having me.
You bet. Tomorrow is Small Business Saturday, and this year, 86% of consumers say they are looking to shop small during the holiday season, according to an American Express study. Elizabeth Gore, co-founder and president of Hello Alice and host of the Yahoo Finance podcast, The Big Idea, joined Market Catalyst on Wednesday to discuss the importance of this weekend's shopping event for small businesses.
Oh, it's enormous. I mean, the fact that you're talking about it, of the 86 million shoppers that are going to hit the streets between Thanksgiving and Cyber Monday, our vast majority of those hopefully are going to walk into stores that they love on the corner. Main Street really thrives during Small Business Saturday. And as you said, small business sentiment has been unusually low lately with the high cost of capital and waiting on the tariffs argument from SCOTUS. But you're also seeing that they are the most trusted group in America, which means folks are walking in, buying those toys, all those things that you love for their families. So it's a critical time for small business.
So when so much is riding on the line here for many of these small businesses, Elizabeth, what do they need to do to make sure that they're capitalizing on it, that they're getting people in the door, and that they can remain in the black this holiday season?
Well, I love the campaigns you see. I mean, Good Foods Family, they are a cranberry company that's trying to beat out ocean spray for the first time. So it's going viral right now. You see superstars like Kristen Bell, all her shopping right now is going not just with small businesses, but she's donating all proceeds to Hello Alice grants with small businesses. They're also utilizing new software and AI, as you said before. PayPal's new program, Buy Now, Pay Later, is a big one for small business owners to allow shoppers to walk in, make that purchase without worry. So I also am really excited to see groups like Amazon promoting small business. So you can go on and click just the small business sellers button. So even if you're not leaving your house, you're still supporting small business.
And that's interesting, too, because I think now in some ways it's harder than ever to find those small businesses. In some ways it's easier than ever, right? In other words, we've sort of seen the franchiseification of a lot of main streets across the country. But as you say, you're also seeing an increase in accessibility to these small businesses online. So if I'm a shopper, what is the best ways to find these small businesses if I want to patronize them?
Oh, I'm so excited about, as y'all were saying earlier, AI. Just jump into your chat GPT. And if you want to do it from a geographic standpoint, if you're in LA and you're looking for pretzels, you'll probably find Shappy's Pretzels. If you are in New York and you're saying, what are the best baked goods? Put that in there. In New York City's and Baked by Melissa is going to pop up. So it actually should be easier than ever. Also, most small businesses are also shipping, which is an exciting time. It's getting easier, particularly with their own stores and things like Shopify, for them to ship out. So you should be able, and even now you can say, hey, I want small business and I want veteran owned. So you can do a double search for your community and give back to those who are employing your friends, your neighbors, your cousins, and everyone you love.
And how are these small businesses navigating the tariff and inventory situation right now, right? And making sure they've got enough inventory in their stores heading into this holiday weekend?
Since COVID, this is the toughest time for supply chain. Part of that is still coming out of the tariffs issue. As I said earlier, folks are waiting on that SCOTUS argument to see if tariffs are going to stand. It depends on where they've diversified, where they're getting their items. If they're in one country and those tariffs are high, they've had to wait. Now, some small businesses have stocked up and tried to keep things local, so they're not having to pay those high prices, but ultimately, it will be passed on to the consumer. And I just ask for consumer patience because your bakery does need to pass along that cost to stay alive.
And Elizabeth, of course, it's not just about shopping for gifts for the holiday. Thanksgiving is tomorrow. You mentioned that cranberry company. And so how should people thinking about for Thanksgiving itself maybe shopping small? I mean, most people, for example, buy their groceries in big stores, but not everybody. You can go to your local butcher, et cetera. So how can people sort of strategize to help small businesses and to shop local, at that time as well?
Yeah, well, The vast majority actually of food production and groceries are still small and grocers in this country. So you can really make an effort to do that. As I said earlier, you can actually go online still as of right now and buy products and have them shipped to your house by small business companies. That is a way to do it. Even go down and think about the corner store and buying some of your wares, some of your plates from that local store. This is what you can do. Those of you who are like me and don't cook a lot, if you want a local caterer, think about that. You're really going to benefit those small businesses.
Elizabeth, great to see you. Have a great holiday.
Happy Thanksgiving.
Thank you. And be sure, of course, to listen to Elizabeth each week on the Yahoo Finance podcast, The Big Idea, on Thursdays at 3 p.m. Eastern, where she talks about all of these issues facing small businesses.
Time for What to Watch Now. Starting off on the earnings front, we'll be getting a big batch of earnings, including reports for Salesforce, as well as value retailers Dollar Tree and Dollar General. Salesforce announcing results for the third quarter on Wednesday. Analysts expecting Q3 to look a lot like the previous quarter, with solid growth, steady demand, and only small changes in profitability. The company's new acquisition of Informatica should help boost revenue over the next year by roughly $1.7 billion. But spending more to grow its Agentforce AI product could weigh on profit margins. Taking a look at the economy, the Fed's preferred inflation gauge is coming out on Friday. That's personal consumption expenditures, or PCE. Economists forecasting total and core PCE, which takes out food and energy, to hold steady at 0.3% and 0.2% respectively on a month-over-month basis, signaling that overall consumer prices are rising, but at the same pace as a previous month. And shifting gears to autos, auto sales data is out on Tuesday. Wall Street anticipating that number to come in at 15.4 million for November. It's a small but positive uptick in demand for new vehicles compared to the prior month, suggesting that consumers are still buying cars at a steady pace. And that is going to do it for Market Domination Overtime today. Be sure to come back at Monday at 3 p.m. Eastern for all your coverage leading up to and after the closing bell. Have a great weekend.